Greetings to all, and thank you for returning to Everything Tesla Stock. One name comes up a lot when people talk about Tesla's stock, its amazing price history, and the purchasing and selling trends over the last 5 years. Cathie Wood, the well-known investor, has long held positive views regarding Tesla stock. But Wood gave a clear explanation of her belief that the stock will increase further and that the sell-off will come to a conclusion in a recent interview. With shares up almost 3% since the announcement, investors have plenty of reasons to be optimistic about the maker of electric vehicles. We're going to discuss Wood's reasoning for believing the Tesla sell-off is finished, as well as her projections for the company's stock price moving forward. You won't want to miss this, so pay attention through until the very finish. Before we begin, please click the like button, subscribe to our channel, and enable notifications if you enjoy this kind of video so you can be informed about all that Tesla is up to. At ARK Invest, an investment management company headquartered in St. Petersburg, Florida, which manages many actively managed exchange-traded funds, Cathie Wood serves as both the company's CEO and CIO. After beginning her career on Wall Street as a stock analyst at asset management company Jennison Associates, Wood rose to the position of Chief Investment Officer at AllianceBernstein. The 66-year-old famous investor has a strong belief that significant technological developments are transforming the world, and she regularly expresses this belief in YouTube videos and tweets, winning her millions of loyal followers on social media. This perspective is supported even by recent suggestions that the Tesla sell-off may soon be over. This may be the case, given Tesla's modest price rise during the past week. All right, let's get started. In an interview, Wood praised Tesla shares and compared the company's technological improvements to those of Apple. Wood argues that, similar to how Apple changed the game with the iPhone, Tesla's electric vehicle success will continue to do so. It is simple to see how Cathie Wood's support would benefit any brand. Her investments in businesses such as Teladoc Health, TDOC, have in the past contributed to higher stock prices. Bullish investors are also starting to like Tesla stock more and more, but they won't sell it off as much if they see Wood praising it. Moreover, Wood's endorsement comes at a critical juncture for Tesla. Fears of a recession are still quite real, as the corporation just provided updates on a number of new goods. Furthermore, the COVID-19 pandemic has resulted in manufacturing closures in China, which has drastically decreased Chinese automobile sales. Because of the turbulent market conditions brought forth by the combination of all these factors, some investors steer clear of stocks with names like Tesla. Similar to Wood, other investors are more likely to conclude that Tesla is a lucrative venture and halt additional sell-offs. Wood makes a strong argument for Tesla, citing the company's technological advancements over those of many of its rivals. Although Wood did not give names, she did reference well-known automakers such as Ford and Toyota. These companies' sales decreased in the first quarter of 2022, whereas Tesla's sales rose during the same time. Tesla's stock keeps showing that not much can stop it from rising, despite growing concerns about a recession. The company needed Cathie Wood's support to convince investors of its potential, and now it has it. With the technology to maintain its advantage, Tesla is still without a doubt the leader of the electric vehicle race. The company will be able to meet demand thanks to the opening of Gigafactory Texas. Beginning with Wood's initial remarks on Tesla, it is clear that she likes the company in part because of the similarities between the two business models, the complementary ideas that shaped the formation of both ARK Invest and Tesla. Both are predicated on the idea that quickening technological progress leads to increased wealth. In this regard, they are similar in that they each have a broad emphasis and an expansive vision, as opposed to concentrating on a specific technology. According to Wood, who made this statement in an interview, Tesla is a value company. That is, it is trading below its intrinsic worth. Upon examining Tesla's earnings, sales, and more data, Wood came to the conclusion that there was significant potential for the stock to increase, and grow it did for the preceding 9 months. Her initial belief that Tesla had much to offer the market led Wood to urge Elon Musk to keep the business open to the public while he was thinking about an acquisition or a sell-off. It was also one of the main causes behind ARK Invest's initial large investment in Tesla. Cathie Wood has predicted multiple prices for Tesla in the future. When Tesla's stock was trading for several times less than it is now, Wood forecast that it would hit $4,000 per share by 2023. Recall that this was prior to the 5-for-1 split. Therefore, the post-split share price was $800, reaching its peak 2 years earlier than she had anticipated. Wood has since changed this to a prediction that Tesla's share price may hit $3,000 per share by 2025 in the months that have passed. Although that indicates a little less maximum value and a little more runway, it does show that Tesla has room to grow. Additionally, research provided by ARK Invest last month included an extraordinarily optimistic price projection of $4,600 per share for Tesla in 2026. Tesla Incorporated's stock may have experienced the highest level of volatility in automotive history. Due in large part to the similarly impassioned leadership of Elon Musk, Tesla stock has transformed from a revolutionary corporation to a social media celebrity. Perhaps no company has better embodied the market's purported speculative overvaluation than Tesla, which has just experienced a stunning decline. As the company gets ready to release its fiscal fourth quarter earnings report, Tesla's shares have dropped more than 20% from the start of January in the first quarter of 2022. Analysts predict that Tesla will generate $16.65 billion in revenue and $2.36 earnings per share. In light of this, option volatility is high when compared to the same quarter last year. This suggests a gain in profit of over 100% and an approximate increase in revenue of 60%. It seems that option traders are placing bets on the continuation of the recent downward trend in Tesla's share price. This is due to the fact that recent option order mood has changed from positive to pessimistic as the stock price has dropped, and supply chain constraints are still plaguing the electric car market, which is causing sell-offs. Analysts will continue to offer optimistic projections ahead of Tesla's fiscal fourth quarter reports, despite the situation being dire. Analyst attention will be drawn to Tesla's core metrics, including its gross margin and strategies for preserving its market share advantage and averting additional sell-off, despite the company having built new factories and boasting record sales of electric vehicles. In terms of market value, Tesla is still by far the biggest automaker, even in light of the recent sell-off in its stock. The market valuation of Tesla is over 3 times that of Toyota Motor Corporation, which is its nearest rival in terms of size. In the past month, Toyota's stock has climbed by 6.3%, while Tesla's has dropped by 22%. The following figure contrasts the recent performance of Tesla and Toyota with that of First Trust's Global Auto Index Fund and 8 of the largest carmaker stocks by market capitalization. Furthermore, it's important to remember that Tesla was surpassed by titans of the industry including Toyota, Ford Motor Company, Stellantis NV, and Honda Motor despite its status as a meme stock during the COVID-19 pandemic. Formerly outperforming their peers focused on gas, almost all electric car stocks are now lagging. Wood sold 67,884 shares of Tesla stock for $66 million on the day the company announced earnings. The fund manager owns the EV firm through 3 exchange-traded funds, ETFs: ARK Next Generation Internet ETF, ARK Invest ETF, and ARK Autonomous Technology and Robotics ETF. The following day, Wood sold an additional $94 million worth of Tesla stock, or 93,160 shares. After the transaction, 1.39 million shares of Tesla are still owned by the 3 ETFs. Wood clarified in a Bloomberg interview, "We've been selling Tesla lately due to its performance in comparison to the other stocks in our portfolio. It has been a reliable source of funding, and we have invested earnings in other stocks that we believe have received unfair treatment." Additionally, Wood has previously said that 10% of an ETF's assets may only be invested in a single company through ARK ETFs due to a self-imposed constraint. She thus usually sells Tesla as its allotment approaches or hits 10%. At the time of the sale, Tesla held 9.36% of ARKLO, 10.5% of ARKQ, and 10% of ARKK. Wood recently increased her estimate of the price of a Tesla to $4,600 in 2026. $5,800 is a fantastic price target for the bull scenario, while $2,900 is the price target for the bear scenario. ARK has given the bear and bull scenarios a 25% chance. According to Wood and her group, Tesla's prospective robo-taxi sector could generate over half of the company's value by 2026 and be incredibly successful. Musk hinted at the possibility that Tesla may not have pedals or steering wheels when he stated during the firm's first quarter earnings call that the company wants to produce a large number of vehicles that are well-tuned for autonomy by 2024. And last, according to ARK, in the worst-case scenario, Tesla will sell 10 million EVs by 2026. In a bull market, the investing team projects that Tesla will sell 17 million EVs by 2026. Tesla shipped 936,172 cars worldwide in 2021. In light of all the current circumstances and advancements, do you believe that Tesla will recover? Tell us in the comments section below. We appreciate your time, and while you're here, please click on any of these two videos to view it on your screen. I'll see you over there.